The only one that's pending bank account approval is our partnership with MetLife on AmLife and AmBank Group. Outside of that, I think we've got enough of a strategic agenda for us to continue to grow what we've done in the last 18 months to 2 years, to continue to serve our customers going forward. With these things, you can never say never to any potential acquisitions, but at this point in time, there's nothing happening. We've made our submissions to our regulator. We've been receiving some inquiries and been responding to them over the last 6 weeks or so. We expect the approval will come through sometime during the course of April, but the exact date cannot be confirmed at this point in time. This is back to Gara.
What's the impact?
The impact from. So if you think about where Malaysia is in its evolution, life insurance and family taxable products are underpenetrated in Malaysia today. Think about where the youth demographics are heading. For the next 15, 20 years, there are going to be more emerging affluent, younger customers coming into the marketplace needing protection products. The benefit of a partnership with someone like MetLife is to have a global player, one of the largest life insurers in the world, active in many markets outside of Malaysia, whom we can clearly leverage to bring IP products and services that they have globally into Malaysia, working with our customers to deliver the right protection products to our customers. So I believe that the upside is huge. Our first challenge, though, with any partnership is to make sure that we bed down the partnership, lay the foundations, which might take us a year or two, but the longer term prospects are very exciting. We are working through with our partner, with our potential partner, by the way, it's still not approved, on the future plans. We haven't, since Bank Negara approval has not been received, we're not in a position to give you the precise specifics of that. But if you give us 2 more months, by the time we come with full year financial results to the market in May, we'll be in a much better position to come out with more specific details around it. If you think about our relative weight across the different portfolios, the one where we are most underweight is life insurance and family takaful. We are a late entrant in family takaful, and our potential in life insurance has not lived up to its expectations. Even in the meanwhile, we've had a change in partnership. We used to have Friends Life of the UK, who for strategic reasons decided to sell their stake back to us and to go back to their home markets, the market they're more comfortable with. And hence, that put us back in our journey to continue to build that portfolio. We are probably somewhere in the 8 to 10 position, depending on which measure that you use to measure market share. We'd like to clearly be in the top 5. Just under 300 million ringgits for the first phase, and not as big a number for the next phase, but a reasonable number for the next phase, which we're still working through and finalizing.
Bigger than 300 million?
No, it'll be smaller.
Smaller than that.
So I think, roughly speaking, we would have completed somewhere around 2/3 to 70% of what we needed to as part of the first phase, roughly speaking. But there are other complexities that we're still working through to work out what the second phase would look like and how we progressively roll it out. Look, at this point in time, we've talked about 2 phases of the program. We've done phase 1, but the phase 2 might be one that we roll out progressively as opposed to a big bang approach, which we've taken into phase 1.
Mr. Rashid, can you tell us more on the core banking system? What is it exactly?
What does it actually do? Let me give that to Charles or Dr. Hasmi. Would one of you like to take this question?
Okay, so the core banking systems typically refer to a couple of different areas, but typically addresses the customer information, data, deposits, and lending. So those are the 3 major areas that are associated with core banking. It also includes the capability to payments, and then has integration with our channels. So typically in this case, Ashok mentioned just now that we have a new teller channel, right? So in this case, we actually rolled out the teller channel as well. So the core banking system.
That is part of the core banking system.
Well, generally you have a combination. Some people will have it as the same, but essentially they're two different things. So the core banking itself is basically addressing the products associated with the deposits and lending. And then obviously a teller channel is really what we basically have in the branches to do servicing for customers.
Like that to that.
I won't add a lot to that. I think Charles got it. But if you really think about it a bit more layman, more simplistic. I mean, what do we use the bank for, right? So we put money, we take out money, we invest and protect. So clearly Mr. Ashok has covered the protect part. So you think about your own, I mean, you all are customers, we are customers as well. And when you go to a bank and the transactions that you do in the bank, and when you put money in the bank, when you invest, and when you save, and you take loans, the core banking engine actually does that for the organization.
It's your name, your balances, your transactions,
all your information,
all
computes your interest.
So how is it different from the previous system?
It's no difference. It's core banking. It is a core banking engine, for example. This is a different. For example, you have Android, you have Apple. So in this case, we just now move into a different system completely, and it's a state of the art because architecture-wise, based on architecture, it's a newer architecture, newer design, better machine, and so on. So it's just going up the conversion.
So what would the second phase cover?
Can I just add to that? Can I add to that? So clearly one of the major difference between the existing system that we had, the old system that we had compared to the current system.
20-year-old system.
A 20-year-old system,
just
right?
To give you a context.
So just thanks, Dato. I think it's just to get that context. So one of the difference is that the old system that we're on was very modular. So you will actually almost have a system for savings, you'll have a system for loans, you'll have a system for very different things, for CIF and so on and so forth. And in the video you've seen earlier, for you to log onto the system, you actually have to have passwords for every single modular system. With the new core engine, it's actually all in one. And even linking it to our new teller front end, though it's two different systems, but we've made it seamless. You can actually just use the systems seamlessly. And clearly, as Dato' Azmi has mentioned, the technology and the architecture behind it is different. And it's not just seamless, but also I think gives us the capability to go to the market faster with more innovative solutions, launching new products, for example, and those are some of the capabilities. Another capability you'll see in the new system, which is currently, to my knowledge, not available in most banks, is that this new system has the ability to serve 5 customers at once. So that's another great opportunity with using this for servicing customers.
What about second phase? What would it cover?
So maybe I'll just go back a bit. Phase 1 is actually the major phase. And phase 1 was actually because we were running on an old engine, and if I can use an analogy, and I'll come back in a while to explain why. It's kind of like doing an open heart surgery, and the man is still walking. Because over that 2-year period of building the system, getting the functional specifications right, making sure that we're building a correct engine that's relevant to Malaysia, to the customers that we want, and working towards that weekend where we went live with all 3 systems at once. It's kind of the old engine is still running, because right till before the new system gets switched on, you're still running on the old engine. And on Monday, when you switch on the new system runs with exactly whatever you had in terms of your information, your balances. Clearly, you'll be happy with more money, but you won't be happy with less. The difference between phase 1 and phase 2, phase 1 was about building a new engine and running with that new engine, making sure we've got the new teller front end, because we've replaced the teller system, the one that when you go to a branch, you get served at the counter. That's the new teller system that we have. We have also replaced, also includes the replacement of the core engine itself, where we store the customer data, where we store details around the interest that you earn and the loans that you have and so on and so forth, and the savings and those kind of things. And the third thing was also we went live with a new data warehouse, enterprise data warehouse, that actually gets connected to our core engine, and that does a few things. So it does connect us to our downstream system that does all the regulatory reporting for regulators, and also to do multi-year analytics. The difference is phase 2, we are not building a new engine anymore because we already have the new system. Phase 2, it's more about tweaking the system and adding more accounts and products into the existing engine. So I don't know if I hope that explains.
But it's all right, okay.
Just one more thing, Anthony. I think I just want to highlight is that between the old system and the new system, the key change is in the traditional system is rate account based. So you had a deposit account or a lending account. Okay, so every time you come, you just give your account number, and that's how you transact. The new system is organized around the customer. So basically, you come as a customer, and all your accounts are put together so that they can be serviced in a much more seamless manner. So that, I think, it's a slightly different way of looking at how you service customers, but it's a major change because the traditional legacy systems are typically very account driven. And so the old system was very, you have 10, you've got 2 or 3 accounts. One is your deposit account, which is typically your savings account, your lending account. You could have a car loan. Those were all pretty much standalone. The new system basically bundles it around the customer, the customer. So you come in, you may have 2 or 3 accounts. The teller will be able to see that at one time. So you won't have to go and actually call on separate, which is a very different way of approaching services.
So is there any chance that we're going to see a reduction in operating costs with the new system?
Yeah, I mean,
How many percent?
probably address it in a few different respects. I mean, the first one is older systems tend to need more technology programmers to make change, because you've got to physically go in and change codes. Newer generation systems enables you to configure. You don't have to go in, and it's like you change some parameters, and that gives you speed to market. It gives you the ability to come out with new products quicker, faster to meet the customer needs. It enables you to ensure that you have the optimal processes front to back to deliver those services with greater efficiency, lower cost to the organization. So you do have some savings in technology, but more importantly, you deliver superior customer service at a lower cost. And that's what this platform will enable us to do going forward.
How many percent reduction?
Yeah, look, we haven't come out and articulated precisely the number, but strategically what we've said is, if I use a loose measure called cost income ratio, which is a composite, last year we talked about a cost income ratio of around 40, just under 48%. This year we said we'll bring it down towards the 46%, and over time, the banks, we said we'll try to bring that down towards the 43% mark. This infrastructure is a key enabler for them by giving us the ability to do 2 things: grow our revenues faster, but more importantly, deliver our services more effectively, more efficiently. Okay. About phase 2, just.
So just add on a bit. So in the bank today, we've got many systems, and this is actually one of our major core engine, right? Our core system. So what will happen in phase 2 is, as we put in more accounts and more products and more services into the current engine that already is operational today, which is AmBank's. The other opportunity we have is that some of the other systems that we move the accounts into the new engine, so you can imagine there are many systems. Now we have created or built the new one, and all the systems starts collapsing into one. You will actually start sunsetting some of these older systems, or you can switch off some of those old systems. So there will be costs that you can look in terms of savings, because these are recurring costs. And the other thing about phase 2 as well is that today, or traditionally, our systems relied heavily on customization every time you want to do something, you have to customize. You go back to vendors to actually customize. With the new technology that we have, a lot of these can actually be done in-house, and it's actually parameterized. And that gets configured, and that enables us to launch things faster. So we have built structures around this to actually support this capability.
Yes, there essentially, as part of this rollout, we have actually looked at security as one of the major planks. So some of the investments have gone in around providing more security around the systems, etc. So the short answer is yes, it is embedded within that investment. That's a difficult one, because the reason why I say it's difficult is because when you talk about security, it is embedded within the system. So sometimes it's security by design, right? Which is basically you design it more securely. It's security by architecture. That means you have a very clear way that you set up things. And then obviously there is specific security spend. So as a bank, we do invest fairly significantly in security because we have a duty of care to ensure that the appropriate security is in place. So I would suggest that there is not to say that there's a lot more spent in security, but the security is built into the system, and investments are already part of that investment amount that Ashok talked about earlier. So it's very difficult to just give you a number and say 5% or 10%. It doesn't quite work that way.
For the video, to summarize, so the customer expect that they will handle in a seamless manner, right? Your new system, speedier, okay? And what else? Customer expect for the new system.
I think basically the design of the design of the system basically, and what we expect is that to have better service to the customer, like you see this now. One is basically better service through more faster service, for example, right? Quality of service too. Accuracy of the service that we give, for example. And also to be able to open up more channels to the organization. The core bank system will allow them to develop other things. For example, they've gone through the tablet, for example, the iPhones, those are things we can open up opportunities going forward. At the moment, as I said, for example, it's a core banking system. It is a core. You need to build on the core. So from here onwards, you can see a lot more coming on board.
Bigger system will have mobile function.
We have, but it's an old technology, right? So I think as you see it out there, there's like a phone today. The way technology is developing, for example, the customer interface and so on, it's all moving up, getting better and better. So the bank has to keep up to the customer expectation to make that service basically to the customer. And its core bank system will allow us to do that, to deliver that kind of service. Example today, I mean, you can see today the technology in the old days, we use green screen. Today, you have a GUI, so there's much more. It's not only for customers, but also for our own internal staff.
So if you really think about it, and I think you said the right thing, right, which is how would customer, what would it mean to customer, right? So I think there'll be at least three stages after the system has gone live. As Mr. Astra has mentioned, we went live on the 18th of November. For the first 3 months was really about people getting used to the system. Clearly, we have got 5,000-6,000 people who have to get used to the system, so there's a bit of learning. We have gone past that, we have stabilized, and we have actually gone past that 3 months. And now we are kind of moving into the second stage, which is starting to leverage on the capabilities that the system has. For example, just now we briefly mentioned that the system has the ability to serve 5 customers at once. So in the longer term, that would mean that you can get served faster, right? And then if I can just elaborate as well, is that when you move from phase 2 to phase 3, you can then start building on some of the rich features that the system has that we have not started using yet. So I'll give you some examples. Clearly, Islamic banking is a big thing for Malaysia, right? And it's also a big thing for AmBank Group. This system that we have actually put in place has one of the strongest, or one of the strongest, not the strongest, one of the strongest Islamic banking capabilities. And if you think about it, there are approximately 15 Islamic principles available globally. This system in a future state has the ability to support up to 13, 14 of those principles. So clearly there are a lot of areas that we have not leveraged yet. And from a customer perspective, what that means you will have better service, you will have more efficient capabilities, and you will also have more innovation and better products that will actually be relevant to customers. I think that's key for us.
We will take one last question from the floor.
Mr. Ashok, would you like to comment on yesterday's remarks by Bank about the new base that the mechanics and the facts of that?
So this, I mean, the first one is around payments, e-payments. Clearly Malaysia has got aspirations to progress the e-payments agenda. By that we mean the ability to use various electronic ways of ensuring payments occur between business to business, and customer to business, and business to customer. We've got a number of initiatives underway to try and progress that agenda for AmBank Group, but that's conjointly with the rest of the industry, and Bank Negara is clearly spearheading that change. Part of that is ensuring that there's an element of dissuading customers. So if there are incentives for customers to move to electronic channels, there'll be some penalties for staying with traditional paper-based mechanisms. Like with everything else, the first objective is to use incentives, use the carrot to get customers to progressively move into more electronic channels. For example, IBG, which is interbank gyros, is a way of transferring funds to other banks that you might have accounts with, or you might want to make payments to someone else, and you can do that for just 10 cents. It's very cheap. And it goes through a switch that's operated by Bank itself, ultimately. And then there are various other electronic payments which will progressively get more expensive. The more targeted you want to be, the more expensive it gets. But the most expensive way of making payments is paper-based, writing the traditional checks. So what Bank Negara have come out with is originally talked about implementing a fee for usage of checks will now commence from 1 January 2015, as opposed to what might have previously been indicated as 1 April 2015. That gives more time for customers to be educated on the alternative options for payments. And the more educated they are, the more benefits they get before we then use the stick approach, which is charging a fee for it to dissuade them from using it. Customers can still use it. It's just going to, and by the way, it costs the bank a lot more than the 50 cents that's been proposed for the usage of checks today. So this is about, as I said, using the carrot first, and then the stick comes into later. So that's the first one that all banks are working on, and so it's clearly higher on strategic priority. The second one is an interesting one around Islamic, where we need to do a little more work to understand it, which is around investment accounts, and which are more truly built around the Sharia principles. And traditionally we've had two styles of deposits. Ones which are principal guarantee, in fact we usually call it that, which is typically what deposits are. Principal guarantee, which means that it's covered under PID. Not profit share guarantee, but principal guarantee in the Islamic world. In the conventional world, it's interest guarantee. So we talk about if you deposit a 30-day money with us, we'll pay you 3.5%. So that's conventional. In Islamic, we'll agree to a profit share based on the assets that back it. The second type of deposit, which we used to call deposit, is what we call as investment account, where it's not principal guarantee. So it truly even extends the full Sharia principles to it. It's an investment account where the upside and downside on not just profits means your principal is not protected, neither is there a guaranteed return to you. So, And Bank Negara is encouraging the development of investment accounts as well as deposits in Islamic in slightly different ways going forward. So they've just come out with it. We're doing further work. We need to understand the implications of what that means for us. In order for us to execute it, we need to make sure that we do it in a Sharia company way end to end. We need to, and that has again implications in 5,000 or 6,000 people because it cuts across our branch heartland. But that's exciting for us in that truly that means the Islamic financing activities can get more differentiated from the traditional, conventional ways of looking at things. And I suspect there'll be more push to try and differentiate Islamic from the way we've done conventional in the past. Very, very exciting developments for Malaysia, which clearly has got aspirations to become one of the Islamic financing centers globally. So it's a good development in the right direction. I suspect there will be many more such announcements progressively from our regulators, and the industry is trying to do what it can to try and continue to promote Islamic. They're the two main ones that came out yesterday. That was their message.
The base rate.
Ah, I forgot about the most
Any framework again.
So they've come out of the framework on base rates, and it's one that we've had some discussions with both internally and with Bank Negara. I think it's a step in the right direction for us. But again, we haven't worked out the exact implications of that internally. We need to do more work on it. Early days.
How do you mean when you say it's a step in the right direction for them? Can you elaborate more on that?
Industry. So what's happened is historically when we've talked about, let me give you two examples as a way of just illustrating it. If you looked at a market like Australia, every bank would have what they call as a standard variable rate for mortgages, which will be different. If you then compare that to Malaysia and look at base lending rate, most banks will have the same rate, if not all. I think there's one bank that's not got the same rate. And the relevance of base lending rate has progressively diminished over time, because when banks prices the products, they'll say, I'll give it to you at base plus, base minus, and there'll be a wide variance. But the reference rate was no longer relevant because people have deviated from it substantially deviated from it. So that's what I mean by, so it's not relevant to any reference framework that we can come up with. It doesn't quite link to the cost of funds, it doesn't quite link to the cost of funds plus provisioning, or cost of funds plus provisioning plus cost, or all of that plus the profit margin. And different banks have different approaches to it, which is what, by the way, Bank Negara is encouraging anyway, for you to have your own reference rate that you're comfortable with. That's what I mean by it's not relevant to continue to use what I would call an antiquated system of reference rates, which have got no relevance to customers or to the banking sector. So what does it mean for us? We truly need to understand the various components of what we would use to, under the risk-informed pricing mechanism, to construct products and offer it at rates that are attractive to the customers, but internally reference to how we would like to conduct our business. That's what I mean by the reference rate, historical reference rate was not relevant. What's going to be, it's going to base, which is going to replace that, will be more relevant, but we need to internally work out what exactly that means in more detail. That's the work that we're working on.
Well, so AmBank welcomes and supports the new mechanism. Right?
Yeah, correct, absolutely.
With that final answer, we have come to the end of today's media conference. We would like to thank the senior management of AmBank Group as well as members of the media for attending.